This stock went up nearly 10,000% in only 6 days of trading. If you had $10,000 invested, you could be a millionaire in nearly a week. Sounds unbelievable, right? Well, stick around because today we're diving deep into this incredible stock surge, uncovering the details behind this meteoric rise and what you need to know to spot opportunities like this in the future. Let's talk about FFIE, or Faraday Future Intelligent Electric Inc. Once hailed as a potential disruptor in the electrical vehicle industry, maybe a competitor of Tesla, FFIE captured the imagination of investors with its ambitious plans for innovative car designs and cutting-edge technology. However, despite the initial excitement, the company has faced numerous challenges and setbacks along the way. While FFIE's vision was compelling, execution proved to be a major hurdle. Missed production targets, financial woes, and internal turmoil plagued the company, casting doubt on its ability to deliver on its promises. This once promising contender now finds itself teetering on the edge, grappling with the looming threat of bankruptcy and uncertainty about its future. Investors and hedge funds looked at FFIE and decided it was crap. They believed the company was going bankrupt, and if the company is crap, then that must mean the price will go down. So they decided to bet against FFIE by selling it short. If the price continued down, they would make money, and it did go down. In under a year, the stock had dropped more than 99%. In fact, they liked selling the stock short so much, soon 95% of the stock's float was sold short. Remember the GameStop craze in early 2021? It all started on online forums like Reddit's Wall Street Bets, where retail investors banded together to take on Wall Street hedge funds. These investors noticed that GameStop had an extremely high short interest, meaning a lot of hedge funds were betting against it. Using social media, retail investors orchestrated a massive buying campaign, driving up the stock price. This forced short sellers to cover their positions, leading to a short squeeze. The result? GameStop's stock price skyrocketed, making headlines worldwide and minting new retail investor millionaires overnight.
When I see meme stock mania taking over again, led by GameStop and AMC.
GameStop.
March 2021, the last time we saw GameStop really rally.
Shares of GameStop and AMC flying.
At its height on January 28, 2021, the short squeeze caused retailers' stock price to reach nearly $500 per share, nearly 30 times the $17 valuation at the beginning of the month. In the wake of the GameStop phenomenon, another group emerged, calling themselves the Apes. These retail investors adopted a similar approach with AMC stock, another heavily shorted company, embracing the motto of diamond hands. They committed to holding their shares despite market volatility, aiming to trigger another short squeeze. However, the frenzy wasn't without controversy. At the peak of the trading mania, several brokerage platforms, including Robinhood, controversially removed the buy button for GME and other heavily shorted stocks, allowing only the selling of shares. This move sparked outrage among retail investors, who saw it as a way to protect hedge funds from further losses. The incident led to congressional hearings and debates over market fairness and the influence of retail traders. At the heart of this frenzy was a key figure, Roaring Kitty. Known in real life as Keith Gill, Roaring Kitty became a central figure in the GameStop saga. His detailed analysis and enthusiastic videos about GameStop on YouTube and posts on Reddit's Wall Street Bets attracted a massive following. Roaring Kitty's conviction and analysis convinced many retail investors that GameStop was heavily undervalued and that a short squeeze was imminent. His post provided a rallying point for the community, uniting thousands of retail investors in a coordinated buying effort. Fast forward to today, and the meme stock frenzy is far from over. Recently, the community has been buzzing with excitement as Roaring Kitty made a dramatic return to Twitter. His reactivation and renewed engagement have reignited interest and enthusiasm in the meme stock communities.
I am diamond hands on GameStop forever. Every single piece of GameStop I buy, I will never sell.
Post from Gil that triggered all this, simply a picture of a video gamer leaning forward.
The recent frenzy around meme stocks led to an astounding 500% rise in GameStop in just a matter of days. GameStop served as the catalyst for the entire meme stock movement. When investors discovered a company with a staggering 95% short interest, they knew exactly what to do. FFIE was poised to become the next major player in the meme stock craze. Investors bought as much FFIE as they could carry. They knew that as the price went higher, shorts would be forced to cover their positions at any price they could get, sending the price even higher and forcing the next short to cover, driving the price even higher in a domino effect. When you buy a stock, your potential loss is limited to the amount you invest. For instance, if you invest $1,000, your maximum loss is $1,000. But short selling is a different story. If you short a stock and it rises in value, your losses can be unlimited. For example, if you invest $1,000 and the stock doubles in price, you're not just down $1,000, but another $1,000 besides. Short sellers may attempt to weather the storm of buying, but as the price climbs, so do their losses. If these losses escalate beyond a certain threshold, brokers will issue a margin call, compelling the shorts to cover their positions. The urgency to cover prompts shorts to buy back their shares at any available price. However, they may find themselves in a predicament where there are no willing sellers, leaving them stranded without an exit strategy. In this scenario, someone must sell for them to buy back their shorts. In the 1890s, Daniel Drew famously coined an expression that vividly encapsulates the essence of short selling. He who sells what isn't his'n must buy it back or go to prison. In just 6 trading days, the stock price of FFIE surged from 4 cents to a high of $3.90, making an astonishing increase of approximately 9,500.49%. This rapid and dramatic rise exemplifies the power of a short squeeze and the influence of retail investors in today's market. The extraordinary percentage increase reflects the frenzy and volatility surrounding meme stocks, showing the potential for significant gains in a short amount of time.